What's good, my people? What's good? What's good? Welcome back. Welcome back to the channel. Um, so today we're gonna be doing a little back testing. I'm gonna show y'all my strategy and how I back tested and a recent move that I missed because I wasn't practicing this strategy when that move happened. So I missed it, but it's not a miss because we know if we see it next time we're gonna catch it. But with me so far, I've been just working, still in school, working out, going to the gym regularly, trying to keep my mental clear when I hit these charts. And yeah, we're gonna go from there. So let's go ahead and look at that's my baby in the background, so we're gonna go ahead and look at our pair. GBP JPY. Now I want y'all to see something with GBP JPY. So remember what I was saying with my strategy, right? You go out to a higher time frame. And let me delete all of this off of here. You go out to a higher time frame, right? And what you want to see is you want to see what the trend was, what recent moves you just got, and so forth, right? So as we can see on GJ, we got this strong uptrend, this trend line support. And give me 1 second.
Donations. Donations. Donations.
All right, I'm back. Sorry about that. So, as I was saying, we got this strong trend line support, right? And with that support, what we see is every time price hit this support, we bounce up, then it sell off real hard right here, right? So right here, we got a market structure shift right there. Market structure shifts to the downside. Straighten it out right there. And also, if you are kind of familiar with some of ICT work and some of the teachings we got a breaker. We got a breaker right there, followed by the fair value gap or imbalance, whatever you want to call it. So we see we got that going on, right? And then we see we got liquidity right here. So let me put a ray right there showing here. This is our liquidity. Put some dollar signs right there, right? So as price get up here, climb, make this trend line, the support trend line, we see we run liquidity from right here. This is back in 2015, around June and July. So we just recently ran it. Once we ran it, what did we see? We see a strong shift in the market, right? Now this breaker, when price comes down here, you want to have this breaker highlighted, right? And you want to watch price until it comes up and get back in this area. Now, let me remove this trend line so we can see clear. All right, I want you guys to see what happened when price came to this area. So price get there right here and right. We're just gonna highlight that area, right? So this red box is our breaker block. We have a fair value gap right there, followed by a market structure shift. So we can expect bearish movement, and all of this happened after taking liquidity, right? So let's go into the daytime frame and see. Look at this leg. We have a strong push down, and even here, what you could do is you could take your box and kind of sharpen things up. Me, I just leave it how it is, but you can sharpen things up. It won't hurt. So now let's get here. Hold on, let me go back out so you guys can see. I can remind you guys. Now remember, price doesn't get into this weekly breaker Let me put that in there. Price doesn't get into this weekly breaker until those yellow line pops up. These yellow line, this first vertical yellow line, price doesn't get into there until then. So what we're gonna do is we're gonna go back and see what happened on the lower time frame within this price action. And I want to show you guys something, because we all know that if you take a breaker, you want to sell from the breaker down to support. So we got a support level here. We got a support level here. We have a support level here. And we have a support level all the way down here. So what you could do with, what can you do with that? What you could do is you could use this as a TP1, TP2, TP3, and this strategy can be used on lower time frames and swing trading. Me, what I want to do with this strategy is I want to modify it to a point where I can catch the higher time frame momentum and snipe on the lowest time frame possible. Well, for me, it would be the 1 minute to the 3 minute, or even the 5 minute. I prefer the 1 and 3 because it seems like you can get the most of your pips with going on those time frames. But what I'm gonna show you is it kind of really don't matter between the 1, 3, and 5. You just need to know what you're looking for when price gets into this high time frame point of interest, right? And even then, if we fib this leg, we know we are above equilibrium. So we are sitting close to the 786, but not there. But we are in premium. So that means that we're above 50%. So anything above 50%, we want to be selling. We want to be selling. Anything below 50%, we want to be buying, right? So let me get some of this makeup off the charts. I'm gonna keep this here because these are we can use these as TP levels. When you see the money signs, just think of liquidity, right? All right, so now remember vertical yellow line, that's when we get into the weekly breaker. Let's go on to the 15 minute and see what happens. All right, we're looking for that yellow line. Was that the first one? Yeah, that was the first one. All right, so this is the first yellow line right here. So price is starting to climb. You could have set an alarm to let you know, hey, we getting close. All right, so I'm gonna show you guys something that happened that's crazy. So this is the peak of the wick inside the weekly breaker. This action right here. I'm gonna stop extending this so we can see what happened within this. I don't want to extend it, right? I want to leave it right there. This whole day of price action was the day to sell from the weekly breaker, right? Now let's look and see what happened on this day. So this day was started with the Asia. Let's look at the Asia. Now this is where the day's quarterly theory tie into this trading strategy, right? So in this day, we're sitting in a weekly breaker. We already swept high time frame liquidity. We already broke structure to the downside, creating a market structure shift. Now we're retesting that breaker, right? Our Asia starts. We get accumulation. Price accumulates. It doesn't really respect the sales or buys. We get all this up down movement, right? We got our accumulation. London starts. Soon as London starts, we know if Asia is accumulating, our day should look like accumulation, manipulation, distribution, and an X. Right? So we have our accumulation. Our London starts. Right off the bat, what London do? London manipulates. London sells. But keep in mind, you don't want to sell at the bottom. You want to sell at the top of the accumulation. You would like to see price sweep the bottom, come up here, manipulate both sides of the accumulation, and you sell from here. So we get our London that manipulates. London manipulates here, And coming into the New York, London still was driving price up, sweeping the top, right? This will let you know, all right, once price break above here, I know that, all right, it's time to sell. If I'm going to take a sell opportunity, I need to take it right here because this is manipulation. And if this is manipulation, our next quarter, the final quarter of the day, should be distribution, which it is, because once you see here, from right there, price distributes all the way down. Just basically keep pushing down. When you look at this last quarter of the day, price just drives it down from here. Now, this is how you tie in the actual strategy. So when I go to the actual day, let's go to the 1 minute because I want you guys to see something. Go to the one. All right, give me a second to find it. Shouldn't be that far. Okay, well, it won't let me view it back, and I'm not finna pay trade and view right now. So we'll just go to the 3 minute and see what happened with price action, which it really doesn't make a difference, but it kind of do because I want you guys to see like what really happened. So keep in mind, accumulation, manipulation at the bottom, coming up to the top, it sweeps this liquidity on both sides, and then we get a sell program. So when we look here, so this is where reading price action comes into play. You got a low here. You got a low here. Right there. And you got a low right here. So we see that price, after price breaks out the bottom of the accumulation, we see price starts to climb, making higher lows, higher lows, higher lows. Keep in mind we're in a weekly high time frame point of interest, so if I'm in here, I kind of don't want to look for buys because this is a bearish POI for the high time frame. I want to see a strong bear movement that'll let me know to sell. And what we see is we see that price creates this sharp wick, taking liquidity from here, retraces, pulls up, and it breaks. Now, once price breaks this level, we have a certified a market structure shift. You can call this right here when price breaks this a market structure shift too, because it did break it, right? So we got our market structure shift right there, and our confirmation market structure shift is right here when price breaks below this, right? Now, this is where my strategy come into play. So if I'm watching price action and I'm looking for the sell opportunity, I'm taking my sell from here and I'm having my stop loss here. We're on a high time frame, so a low key swing strategy. So I'm taking my entry from here to here, and I'm hoping, not hoping, but I'm expecting that this high should be protected. This one can be, but I have seen price run these. This is called a mitigation block. It's a lower high showing that, price is weak and it breaks below. And just for future reference, we're going to box this up. This is a mitigation block. So when price does this, it creates this mitigation block, right? I'm looking to sell the mitigation block here, and some people like to put their stop loss at the top of this mitigation block, but I find it risky, and I don't like, playing like that. And what I would do is I'll just have it right here, right there. And then what we see also is we have a inverted fair value gap. So we get a strong push up, strong push down. So you can also look at this as an entry. And this is probably the entry that I would take too. Because this will maximize your profits, this move right here. And I want you guys to see what happened when price comes and tests this whole scenario, right? So let's extend this right and let's extend this to the right. And I'm basically showing y'all what I see when I go back and I back test this, because I seen this and I was like, man, I should break this down to my channel and show people what it looked like. So strong mitigation block. The big box is the mitigation block. The small box is the inverted fair value gap. Let me tighten that up right there. And remember what I said, we're on a high time frame POI. So what that means is, remember those yellow lines we were marking up, right? Those yellow lines. So we got TP1 is right here. We got TP2 right here. And we got TP3 right here. So to TP1 from this entry, we are looking at a 1 to 23 risk to reward ratio. And to TP2, we are looking at a 1 to 36. And to TP3, we are looking at a 1 to 44. So let's just say we leave it here at 1 to 23. Let's zoom back into our chart and see what happened when price comes back up into this area. Let me clean this up because I don't need this no more. My chart is getting cluttered. And I'm hoping that y'all can see what I'm doing and understand what I'm doing, because this is real important. So we have our mitigation block right there, which is this move. Then we have our inverted fair value gap. And let's see what happens when price get up to this area. Price gets there. And as you can see, so price runs this inverted fair value gap, right? Runs it, breakdown, comes back up, fill this mitigation block, right? And remember, I was telling you that people like to take the mitigation block with the stop loss right here at the top, which is this top white line, right? But when you look and see what happened, you get price comes up here, breaks, climb back up, and hit this mitigation block, right? And once it hit this mitigation block, it would have stopped you out if you would have had your stop loss at the top of that mitigation block. That's why when you come back here, I say put it at this New York AM high right here. And once you do that, you should be able to catch this swing right there. And so entry right here, which we are in a mitigation block, and this kind of sits at equilibrium of the mitigation block. When you actually look at it, it's very close. So I would take this entry to this New York high right here, and that would be my stop loss. And let's go and look. You get wicked in right here, price breaks, never makes it up to this yellow line. That yellow line is our stop loss, right? Because that's the New York high. Now let's go to the 15 and see. So you sell here, stop loss here, and as you can see what happened, let's go to the hourly. Maybe we can see it better. I'm gonna pull this over for you guys too. Yeah, that looks better. Pull this all the way over for you guys. So bam, you get wicked in, and when you look at it, when you look at it like this, you look at it and you like, man, I faced some drawdown, but look at the sales that happened afterwards. The sell-off that happened, you're right now currently, your trade will be sitting at a 1 to 12. And this is easy money. Like this 1 to 12 would have been so easy because from here it took what, 1, 2, 3, 4, 5, 6, 7. So a week worth of price action, and you would have been at a 1 to 12. And keep in mind, I would slide my stop loss as price is coming down. I would look for these retracements, and bam, once price breaks here, I will have my stop loss. I'm sliding my stop loss as price comes, because you don't want to see this thing turn around. You are shooting for a high risk to reward. This strategy does give you a high risk to reward ratio. You do come back, you come here, and that's a 1 to 12 easily within a week. Just holding, not doing nothing, just letting price run, and that's easy money. So this is episode 1 of, I guess, showing you guys how the strategy actually works. You find your high time frame structure, see what price doing, find your high time frame POI, and you want to make sure that you're in premium and discount and doing the right things when you're in that area. And then after that, you want to wait to price retest that POI. Once price retest that POI, you want to get into your quarterly theory mode, and you want to watch for accumulation, manipulation, distribution, or X accumulation, manipulation, and distribution. You want to look for that. And then you don't, if you're in a high time frame sell POI, you want to wait for you get manipulation out the top of structure. So you want to see price sweep both sides of liquidity basically, and you want to look for a sell model of the day's quarterly theory. That's what I'm trying to say. You want to look for a sell model of the day's quarterly theory. And then once you do that, don't remember, you want to take the highest point of that day, because you don't want to get stopped out. You seen what happened when a mitigation, gets hit, and it's respected because price really didn't blow past it, but you would have got stopped out. So I think it's best to just go ahead and take this high right here, the high of the day, and just let price ride from there, because once you look at this as a whole, you're not missing a whole lot. And if you catch one of these strategies and you do the funded challenges and stuff, this strategy, I believe that you can win a funded challenge with just one of these trade setups. So you could just sit on your hands and just let price does whatever it does, and you can have it set up to where, one shot and you good, because you got a 1 to 12. Like, this is easily a 1 to 12 within a week, and it's just, you didn't have to do nothing. You could have, once price broke, you could have just put your stop loss that entry and just let it ride. Could have put your stop loss here, just had your stop loss sitting above this high, because you know that if it breaks this is a strong area of liquidity. If price breaks this, then it's most likely gonna keep coming up. But as you see, price didn't break it. It came close, and it sold off, right? So selling, moving your stop loss, that's something you gotta learn. I will probably do a video on it later on down the line, but look at this. This is beautiful price action, and you could have easily passed the challenge, or you could have used a small account, which is something that I do. I take like 100 or 200. I think the most I did was like a $300 account, and what I do is I try to flip the account. I'm taking aggressive trades. I would take a setup like this and basically be real aggressive with that account and try to flip it to get some quick cash. That's something that you could do, or you could take the challenge and trade it smart and catch setups like this. And keep in mind, it didn't even run to the first TP yet. So the first TP is sitting at a 1 to 23. So crazy numbers, right? And yeah, man, that's what I'm looking like with this strategy. I'm looking to catch big moves. If you know something that can help the strategy, or you know something that could tweak it and make it better, let me know. This is not mine. I don't, I take some of ICT teachings and Day's quarterly theory and kind of price action and some of the old teachings of Forex, and I just basically put them together. I put them together and try to get money out the markets. And another thing I want to address is people will say, "Oh, you did that hindsight. It's easy to mark this up once you see the trade." Well, I want to tell you this. If you can't look at price from high time frame and set a range and mark point of interest on those range on those high time frame basically POIs. If you can't do that, then I don't know what to tell you, because this is literally go to a chart, any chart, go to the high time frame, mark your premium and discount, look at your range, highlight all the POIs that's on that high time frame, wait for the lower time frame to get into those price actions, and you want to see accumulation, manipulation, distribution, and X, or X accumulation, manipulation, and distribution. And you catch it just like how I showed you. Remember, go to the 3 minute. And I know I'm beating on a dead horse, but I'm gonna keep beating that motherfucker right now. So we have accumulation, manipulation, distribution. People would have been seeing all of this buy movement, which if you're a scalper, this is nice. Cause I'm not gonna lie, this is real nice price action. But look at the overall trend. What happened when price comes back up here and retests this right off the gate. And if you're not a confirmation trader, you could have caught this move. You could have caught this move here while it was forming, sold soon as it broke this, and just rolled it down. And you probably could have possibly double dipped out the market. You could have rolled it down and got back in once you seen that it's retesting. So that's how we look. So I'll see you guys on the next episode. Bear with me. I know my background is loud. My teachings, not the perfect YouTuber teachings. I'm just a regular dude trying to trade and help y'all get money. So see y'all, man. Stay up. Stay safe.